Welcome to all our viewers. Welcome back to our regular NFO series where we speak with the top management, fund managers of the AMCs to understand the new fund that's coming into the market. We understand what are its features, benefits, what are its insights, and why this fund is worth investing. And today we'll be discussing the ICICI Pru Rural Opportunities Fund. With the name itself, it's quite interesting for me at least. Hope it is interesting for all of you viewers as well. The NFO period will begin from January 9th, 2025 and will be open till January 23, 2025. And today, to speak about the fund and its strategy, we have with us Mr. Manish R, Head Product Communication at the ICICI Pro AMC. As the head of the product communication, he acts as a link between the fund management team and the sales team. In his current role, he is also responsible for closely working with the investment team to design and formalize the product and various macro strategies. He's also responsible for managing various in-house valuations, asset allocation models. With over 10 years of experience in the field across various functions like sales, product designing, and product communication, he's a great asset to the asset management company that we are going to discuss with. And it's so good to have you back with us, sir. We had a last discussion about another NFO that ICICI Pru brought in, and so good to have you back here again to understand this another innovative fund that you're bringing in.
Thank you. Thank you for having us here. And on behalf of ICICI Prudential Mutual Fund, AssetPlus, thank you for giving us an opportunity. Thank you.
Okay. Yes. So let's dive right into the questions. The first question will be, is around the investment thesis. As I first started out, the name itself, the Rural Opportunities Fund. We know the soul of India lives in the villages, as Mahatma Gandhi
Absolutely.
said, right? So, what makes the rural development a compelling theme for the long-term investment, and how does the fund plan to capitalize on it?
Sure. Absolutely. So I think what you said, the Mahatma Gandhi statement, is very true. If I have to back it up with number, I can tell you that almost 64% of the population of India lives in rural places. So it's not a small thing which we are talking about or small theme we are talking about. One, and almost close to 46% of the GDP is contributed by rural economy. So it's a very important aspect for India's growth story. So we've heard a lot of people, economists talking about that. See, India is on a growth trajectory. It's going to be big in the coming years. By 2027 we will touch this kind of a GDP growth, etc., etc. But one thing we need to understand, that when we are aspiring for those kind of a growth, it cannot happen without rural participating. Right? So you have 64% of the population, 46% of the GDP. It cannot happen without that. So what we believe is about rural is that today we are at the cusp of a turnaround on the rural side. And I'll be honest that for the last 4 5 years, rural as an economy has not performed so well. And the main reason attributed to is COVID. When COVID happened, there was clearly a K-shaped recovery. We call it in the finance world. K-shape means it's kind of a shape in K. There's one part of the economy which is urban economy, where the corporate people or the employed people, their job didn't suffer so much post the COVID. Their growth was normal, their income was normal. But the rest pack, which was rural, who were very focused on agriculture or very simple construction job or a manufacturing job, or very simple, I can say people who are in the daily wages and all, their income kind of got impacted massively, and their balance sheet was under strain, their income was under strain. And it took some time for them to come back to shape. And now we are seeing, for the last 4 5 years of things shaping up on the economy side, growth shaping up, we are seeing clearly green shoots in the rural space. And that's why we're calling it as a rural opportunities, because that's the space which is looking very attractive. That's the space which is going to take India to the next level in terms of GDP growth. And that's why we believe this is a great time to
Hmm.
actually come and invest in this rural opportunities as a theme.
Fair enough. Fair. I think and that's actually quite an interesting insight to have. the COVID, when we talk about COVID, I mean, I knew today that, it's a K-shaped recovery. And now that we think about it, yes, I mean, we at a tier one, tier two cities did, get back on our feet slightly better or slightly easier,
Yes.
but the rural side is, still facing the impact. They're still reeling from that situation. And now we are seeing the recovery sense. And yes, that makes a great point. So then when it comes to sector allocation, sir, what criteria do you use to decide the allocation across sectors like agriculture, manufacturing, and services within the rural economy and such?
Sure. I think this question is very important. So I just wanted to clear some air over here. Is that a lot of people have the misconception that when we talk about rural, it's all about agriculture. Like people think it's only about agriculture. It's about uh, let's say agri-related chemicals or agri-related products, or maybe FMCG where rural people only consume. That's what people think. It's a very narrow theme. It's just about the agri. But actually, if I have to tell you the sector or the play which is there is actually the rural opportunities name suggests that it's definitely on rural consumption, but a bigger part of this portfolio is also towards rural development.
Mm-hmm.
Uh, what I mean by rural development is that, see, in rural area, you have roads also. So there
Mm-hmm.
is roads people are using. There are houses which are constructed over there. So there is house kind of a thing. There are people who are using mobiles also. They are also using YouTube. They are also using um Netflix, Uber, etc. There are people who are using banking services. There are in rural people are using insurance services. There are in rural people who are using automobiles. Maybe it's a two-wheeler, maybe it's a four-wheeler, maybe it's a tractor.
Correct.
So why I'm giving all these examples is please don't connect it only with agriculture. It's
Yeah.
again a very broad economy. So in terms of sectors wise, we have a huge bouquet of sectors to play in this theme, and that's why I'll say this is a very broad and flexible theme where we
Mm-hmm.
can get exposure to, let's say, auto or a cement or a banking or an insurance. Uh, FMCG, yeah, definitely there is consumption. FMCG we can play out well. Agrochemicals we can play out well. So all these sectors we can comfortably touch in this space, and that's what would be our strategy is to keep it very broad, to
Okay.
keep it very flexible
Mm-hmm.
in this fund.
Okay.
Thank you.
So the fund prospectus says that, how does it is about the benchmark comparison. Is that how does the fund's performance and the strategy align with or differ from the Nifty Rural Index?
Yeah, sure. So I think one thing, if you look at Nifty Rural Index, and just to the previous question, I'll try to connect over here is that
Mm-hmm.
even if you look at the index, it's a very broad index. It has almost close to 11 sectors and almost close to 75 stocks. So we're talking about a very, very broad index. So that only clarifies that this is going to be a very good, broad, flexible play. Now, when it compared to benchmark, we can have a lot of sector deviation based on the fund manager view. Like if you look at the Nifty Rural Index, there is good amount of consumption and there is good amount of development oriented sectors also. If I have to divide into two, consumption simple, you can talk about FMCG, auto, etc.
Hmm.
Development, you have sectors like cement being there, construction being there, and all that. So it has a good uh, bifurcation between, let's say, a consumption and development.
Correct.
But when it comes to our fund, we can have more flexibility that if we believe that there is a good consumption, there is a good income growth happening on the rural side, and the consumption side can play out well. So we can go very overweight on the consumption side and can go low on the development part. But when we envisage that, it's going to be the other way around, there is going to be a very solid push by government on the capital expenditure or capital infrastructure building on the rural side, then we
Mm-hmm.
can push towards the development side and can manage the consumption in a different way. So I'm saying we are going to be very, very opportunistic, and that's why the opportunity is named, that we are going to be very opportunistic in our approach, that how the rural economy is shaping up, based on that we are going to play on the sector. So it's going to be actively managed
Mm-hmm.
compared to the benchmark in
Yeah.
terms of allocation.
Yeah. Okay. So the next question is about the risk management. Like, whenever we hear the word rural, so again, as you rightly say, we have very set team around agriculture, right? And we know now that it's not the case. So then,
Absolutely.
the same case then applies to the risk management. We have very set themes that that there may be some XYZ risk. But what do you think are the primary risks associated with investing in the rural themes? And how does the fund aims to mitigate them?
Yeah, absolutely. I think one big, if I have to give a very 30,000 feet view on risk wise, is that it's a equity product. It's
Hmm.
a equity scheme, right? So there would be risk associated with any equity schemes in terms of
Correct.
investor who are investing in it. But I think second, which if you go slightly below the 30,000 feet and you narrow it down, then people ask that is it going to be a very concentrated or sector specific or a theme specific theme? That risk is not there. It's comparatively low because, like I said, it's a broad play because you're betting on the rural economy complete development. So, in terms of sectoral concentration, I think that risk is much, much lower or moderate in this fund. It's a very broad theme. So that risk is well avoided in this kind of a theme compared to any sector fund or etc. You'll talk. And third thing is that it does not have any concentration risk on the market cap also. So one was sector, but on the market cap, there is no restriction to invest this much in large cap. There is no restriction to invest in mid cap, or there is no restriction to invest in small cap. It's completely flexible. So that's
Hmm.
also a risk mitigation strategy. I can say that you have flexibility to move across market cap. You have flexibility to move across sector wise. So and like I said, this is a pretty broad theme and you can get it the picture from the nifty rural index only.
Yeah.
75 stocks, 11 sectors. So I mean that kind of a risk can be very well moderated over here.
Okay. So then, sir, when we say rural, definitely the government policies impact comes into the play, right?
Absolutely.
Because a lot of our government, schemes are aimed at the betterment and upliftment of the rural, that is tier three, tier four cities, right? That is the villages that we're talking about. So then, we have those government initiatives like Make in India, PLI, rural
Absolutely.
electrification, right? So do these government policies are considered into the while management of the fund during the fund management part, and how does their impact will be calculated over the long period that we are looking at this fund's investment?
Sure. I think government policies are very, very important for any segment, whether you're talking about rural or urban, but it gets accentuated or it gets slightly more amplified in the rural space because that's how the economy is, rural
Hmm.
economy is. And I'll explain this point is because why it gets amplified is because, see, very simple example. Uh, and if I have to give a very simple example, is that let's say if we give 50,000 or 1 lakh money, just as an example, to a rural, to a urban population, let's say any urban individual, the first thought which he will get is that okay, I have got 1 lakh rupees, maybe I'll invest in a stock or a mutual fund or etc etc. That's how his thought process is. But same thing, if that 1 lakh if you give to a rural person, the first thought he would be getting is that okay, maybe I'll consume this, I will use this in, let's say, buying a refrigerator, maybe a washing machine, maybe a cooler. So the multiplier effect or the effect of that 1 lakh is much much amplified in a rural welfare scheme which government runs. It gets amplified to a different level because the consumption happens very very fast. It's
Hmm.
not like a urban person is keeping it aside, maybe savings, maybe fixed deposit. Doesn't, it just right away goes into the economy. And that's why I'm saying government policies amplifies on the rural side, right? So that's one point which I want to highlight. The impact is much better. Second thing is that, see what has happened in the rural side, like you said, make in India, manufacturing and all. You have to think about is that whenever a international company, if they wanted to come and set up a manufacturing hub in India, they have two requirements predominantly. They want good labors, right? And second is cheap land, or a quite, I can, a
Yeah.
big piece of land. Now
Correct.
imagine, would you get this in Delhi or a Bangalore or a Mumbai or any of these cities? It's very difficult, right? And plus the
Yeah.
labor won't be cheap over there. So what happens if you look at the setup wise, the manufacturing hubs which happens in rural areas
Hmm.
predominantly. You will see the list of companies who have said like Samsung or a Google or a in Chennai, some suburbs. If you look at, you will see major manufacturing hubs get set up in a rural area because you get good labor and you get good piece of land at a very good rate. So what's happening is that the drive of government, especially on the manufacturing or make in India, is kind of impacting the rural economy in a much better level, and that's why it's
Hmm.
again getting amplified because the things are moving to rural. And when a
Hmm.
big company comes and set up things, the whole
Hmm.
ecosystem changes. People gets more employed, people spend
Hmm.
more, etc., etc. Right? So that's the second point on the manufacturing. Third thing which I want to highlight is what government has done over the years. In Indian government, what they have done is that over the years is that they have said that okay, I wanted to push India towards manufacturing. That's clear, but before pushing India towards manufacturing, you have to ensure that your house is clean. It's a kind of a statement which I'm saying. What do you mean by house is clean? Is that when coming to set up a factory in a rural place, you need to check whether they have proper roads or not. You
Hmm.
need to check whether the rural is properly electrified or not. You need to
Hmm.
check whether all the rural villages have proper drinking water or not. You need to check whether all the laborers or individuals who are there in rural are they properly literate or not. Last many years has been spent by government on improving this quality of life. So today if you will see 100% of the villages are electrified, 99% of the roads in rural are all weather roads, 75% of the population has clear water to drink. PM Jan Dhan Yojana has ensured that people have bank accounts to have transactions with. Right. So I can go on and on. But thing was that you wanted to set up manufacturing in India, but government was clear, but get the house clean first. Then only you can
Hmm.
welcome up people outside. So this was third thing which kind of triggered the rural economy very well was the quality of life. And last thing I'll tell, there is structural changes which is happening in rural without any external intervention. There are
Hmm.
things which are changing. I'll give you an
Hmm.
example. Like in rural, there was a period when 80-85% of the people were in agriculture. Now that
Hmm.
figure has come down to 60% in agriculture, and almost close to 40% are there in manufacturing or construction job.
Hmm.
Manufacturing and construction are better remunerative job. Zada,
Hmm.
they get better income, and that's why they are able to spend. So that's structural change. Second is the per capita income of rural has gone above 2000.
Hmm.
Urban per capita income was about 2000 in 2010. So in 2024, finally, rural has gone above 2000, and 2000 is a magical number per capita wise because after 2000, the basic need of roti, kapda, makan is met, and people start spending on other things, let's say
Hmm.
car, vehicles, entertainment, movies, medias, etc. So the consumption goes very well. So that's a number which has changed. And lastly, women employment has gone big in rural side. Think about a very simple house village where you have one person earning, but when you have a lady also earning over there, the incomes doubles and it has a
Hmm.
big multiplier effect. All these changes which we are seeing on a very big structural way, and that's why we are very positive on rural as a story.
Okay, and actually a very interesting, insight. And to think about it, yes, it will and it is making a difference in the long
Mhm.
run, and might just play out in the overall India growth shining story for us in the next coming years. So the next, I mean,
Absolutely.
the last question I would like to ask you is that the future outlook, like with the expected increase in the rural demand and budget allocations. What specific sectors or trends do you foresee driving the fund's growth over the next 3 to 5 years?
Yeah, I think which you said as a future triggers which you see in the rural side. I think I've talked about a lot on the structural or the long term story, very looking positive for rural. But I'll talk about briefly about the immediate triggers which we are seeing already. So I'm saying there are two triggers which are coming in on the rural side is what we have seen the election trend which has happened in various state elections when we have seen that government has been very conscious in also spending towards the rural side. Like some of the welfare schemes like Ladli Behna, which you have seen in Maharashtra and other states, they have announced a lot of rural focused welfare schemes, and that is positive because that will again kick start the rural economy in a much faster stage. So you have some more important state elections coming, like this year you have Bihar, maybe in the next 1-2 years you have UP elections coming in. So you're going to see a trend of welfare schemes being announced where the major beneficiary is rural, so that economy is going to prop up much better. That's a immediate trigger which we are seeing. Second is this fund is strategically placed just before the budget. When it comes before the budget, this is kind of placed that way, is because what we are envisaging is there is going to be a good amount of allocation even towards the rural development. uh, Compared to the last 4-5 years, what has happened, it would be much better, because if government has to drive the GDP growth, already your urban population contribution is running at full throttle. Already
Mhm.
it is there. Now you want to have the higher growth or the next level growth, you need to bring in the other players into it, and rural is a play where government is also very clear that this is the element which we need to take. So there's going to be good focus on, we expect there is going to be good focus on budget in terms of rural. So that's also a second immediate trigger for that, why we are bringing this fund now. And people can ask, okay, it's a structural story, but why now? So these are two main reasons why now, is election and budget. Apart from that, like you've lastly said, is which all sectors, which all themes we look very positive, is I think the banking space is something which is looking positive. Valuations is much reasonable, they've corrected, and it's a good play on the rural side, certain banks which we can play. Insurance is something where we are very positive. Insurance as a play, it's a long structural story where there is penetration which is going to happen. And if you look at insurance as a sector, they have not moved much. The values is not frothy, not expensive, again very well attractively placed at this point of time. So that's second. Cement is something which we are very positive on. Cement also, if you look at company wise, valuations is not expensive, not moved much. There also there is a lot of comfort. Yes, we would be focusing on consumption themes like FMCG and all. Even FMCG, if you look at last 6-8 months, the valuations kind of become reasonable. So FMCG is a space which we look at, and some bit of auto also we will play. So these are few sectors where we would be positive while playing this game.
Okay. Okay, thank you so much, sir. Thank you for giving your time. And I think I learned a lot out of this conversation. It really seems to be that the rural story is here to stay, and it is here to, and it is here to take India ahead. And I hope that our investors do see the value in it and get a lot of investment into the fund. We hope you all the best and hope that the fund opens to a great market response.
Thanks a lot. Thanks a lot
Thank you
for
so
giving
much.
us the
Thank
time.
you, sir. Yes.
Bye.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.